Hi, this is Charlie giving you Monday's market commentary, and I hope you're very well. Now, just a couple of weeks ago, I was talking about the dark side of trading, I called it. And I was really talking about a real situation which was happening at that point. I just didn't mention it. It's not a trader who's on our list, so to speak, or who follows us. It's a third-party trader I heard about who had got themselves into a trade on the pound. If you remember that video, or you just want to go back to it, I think it was the video from the 29th of February that I titled The Dark Side of Trading. And I was giving an example if you get in and making sure that you go long, and because you get overconfident, you think it's definitely going to go higher and you don't put a stop loss in. I went through that whole scenario. Well, basically that scenario was a real scenario, and this trader had got into the pound dollar at 142 without a stop loss, and the trader then held all the way down, and typical sort of thing that can happen. Yes, traders make mistakes, and especially newer traders. I got a feeling that this trader is newer. It had done quite well, had got overconfident, then thought that he was bigger than the market. If you watch that video again, you'll hear what I was talking about, that sort of thing. But unfortunately, what happened was obviously the market came down, and at the same time he doubled his stake, so he was trading at like £75 a pip. He had a 40k account, something like that, and £75 a pip, and was like something like, I don't know, maybe I'm guesstimating, but probably down around about £25,000 on the account in this trade. Now, from what I've heard, this trader closed out half the position, maybe down here, and then obviously cable then gradually came up. And I think I was talking about this in that video of a couple of weeks ago. I said, look, even if a market then comes back up for you, it just teaches you a bad habit, a bad lesson, or a lesson in bad habits. Because look, the cable did come all the way back up. Now, I don't know, I haven't got a clue where this trader came out and exited, but certainly that trader wouldn't have been down as much. But even if it had closed back out at 142, it'd have only then, I say only, but it had then taken maybe 10,000 to 15,000 loss. Well, still better than 25 to 30,000 loss. Anyway, but what I implied was in that video that if you get away with it, so to speak, if you maintain that mindset, it will come back and get you at another time. And now I need to move on to the oil market. Now, I don't know what's happened, but I've literally just had some communication come through over the weekend from another trader who's concerned about that individual and what they've done, because already that individual has now wiped out their entire £45,000 account. It's been wiped out. They've subsequently been trading oil, probably to try and make back the losses that trader made on cable, trade into aggressively, and is now completely wiped out. And I get really disappointed with that sort of thing and frustrated. I understand that there's going to be a certain type of individuals out there who just can't help themselves. They have a gambler's mindset. They learn to trade, but then if they take losses, then they can't help themselves and they start overgearing. So I get that, but it's just disappointing because it's individuals like that who create a bad name for trading in a way, because what they do is, I don't know, maybe that individual's going to quit trading. I don't know. They obviously haven't been trading very long, but you can imagine they'll tell their friends and family, oh yeah, I quit because I lost loads of money, and all that happens is spread the bad word. Oh yeah, so and so tried trading, yes, and they blew their entire account. Oh yeah, you shouldn't do that trading, it's high risk. And you think, no, what that individual trader was doing was high risk by not using stop losses and way over gearing in order to wipe their account out. So I think it's another good example of where you have to be careful. And I know a lot of people will watch this video will just be thinking, Charlie, I'd never do that. And that's what I hope that the majority of people watching these videos would say, do you know what, I would never do that. I would never not use a stop loss, or and I would always manage my risk. So that's my disappointment for this week out of the way, to hear that another trader bites the dust, so to speak. Now, I don't know if this individual is going to dust themselves off, put some more money in their account, and then start again. But even if they do, they've obviously got that gambler's mentality, and they need to really try and stay on top of that. Obviously, it will create a lot of pain, what they've done, but it is a case of, do they learn from it? You can take the pain from a situation like that, but you also have to be able to learn from it and not just think, oh well, I was right, but this and this. That's the wrong mindset. You were wrong at every level in order to have blown your account out. So you have to go back to the drawing board and say, okay, the way to make money in the markets is slow and steady. It's slow and steady. It doesn't have to be like an overnight making thousands of percents and everything else. The way to make money in the market is nice and steady. That's how you get rich in the markets. Right, okay. Now, someone on our YouTube channels asked a question about charts. And so they've asked about, Charlie, why do you use, I can't remember what the question, oh, I've got it here. I've got it off screen. Why do you use tele charts for your Friday's trades, but use eSignal at all other times? Well, I use eSignal at all times, not every other times. It's just that I have 6 screens and I have 2 computers running 3 screens each. And so on one of my PCs, I have just my eSignals charts running. So if I bring up a pen, I bring up just the bank of 3. I've got one. There we go. So one PC runs those. There's my PC, and then one PC runs my other 3, which are below, and something like that. And it just so happens that when I'm projecting, then it's a lot easier for me to just project telecharts, which you're seeing here, and then I can have my eSignal sitting up here, so I've got more information that I can see. So if I use this telecharts for projecting, then I can see all of my nice big screens up here, and so I can keep an eye on everything that's going on, and I have more information to hand, i.e. lots more charts, different time frames, all at the same time, because I've got a lot more screens there available to me. So there's no real reason. It's just telecharts is really just for me to project. I don't actually, it's just perfect for me to be able to use something. I would use anything. Just so happens that I've been using telecharts for years for that. So what main charts do I use? The main charts I use are eSignal, not telecharts. Telecharts is just easy for me to project for the purposes of the video. Okay, hopefully that answers that. Now let's go and have a quick look through the markets. But when it comes back to charts, there's this whole thing about charts. I think people get so caught up in it. If you're happy with something like a broker's charts or free software, fine, stick with it because it keeps your costs down. So you don't have to spend out on charts. I know that Kim's negotiated a great deal with eSignal. So if you wanted eSignal with if you wanted eSignal, Easy Trader have got a unique deal. Kim's negotiated a unique deal, unique to us, which is $69 a month. So if you wanted it, then you can do that, and you can get that. And that's just for FX, though. That's just for FX. So it may be of use to some people. I'll put a link up on the video if I can find it anyway. Right, okay, let's have a quick look through the markets. You can see the time's going on. And now the stock markets, they're continuing to burn higher. So I've been talking about this recently with some of our members in our trading room, and I do think that at the moment, although I've been longer term, I see the potential for a run all the way back down to these lows in the stock markets. I've been concerned about the amount of fear in the market, and if there's too much fear in the market, then the market's unlikely to go down too much, and I think that's the case. So the market probably needs to hold up for a while, and so that maybe that fear can start to dissipate, and then if the fear dissipates amongst the crowd, then it allows the market to then start to roll back over. Because if you've got too much fear in the market, that means that people are probably already short, which means who's left to push it lower. So we need to let that fear dissipate within the market, and that will allow the market to then maybe have its next leg. But I don't know when that's going to be. Is it going to be this month, next month, or in 6 months' time? I do not know. But what I do see is the potential for that. But as it currently stands at the moment, it's still strong and it's running back up, so we can look back up. Let's actually just zoom out. Actually, what we can see is actually we're coming up into these prior lows even now. So we're actually coming up into a resistance zone here. This is on the Dow. Let's just have another look at the S&P. Yeah, same sort of thing with the S&P as well. So everything I've just said, we are into a resistance zone here. So it'll be interesting to see this coming week whether those markets just start to chop. That would be ideal if they chopped around there and started to just just move up and down, but not really make too much headway. That could be an indication over the next week. Well, obviously we've got FOMC out this week, so that will probably be a big factor as well. So for me personally, keeping my powder dry pretty much until Wednesday, because I'll be doing little trades, but really waiting for the main event on Wednesday evening. Okay, I shall leave that with you. Have a great week. I'll be back in touch on Friday.